In the FX quadrant, taking a look at the September Japanese yen future, which completed its fourth up day in the last 6 sessions, bouncing off of the lowest levels that we've seen since September 1998. So far, the rally off those low levels, that low level happened a couple of days ago, by the way, that 6-session rally has reached about plus 2.3% from that low. And this is the first up week for the yen in the previous 7 weeks. Now on the low today, 72.78 half, that was down about 0.2%, but the rally up 1.56% took us to 74.07 half. We ended up finishing the day up a little bit better than 1.1%, 73.78 half around the New York close. Got a couple more points after that and then pulled back a little bit. Now, Japanese inflation came out, and that inflation stayed above 2% for the third consecutive reading, the third consecutive month. And that's the first time that's happened since 2008. Now, we had the BOJ decision this week, and they did nothing. Left rates the same and said they have no intention of moving rates, and left that rate peg on the 10-year JGB at the same level. And this is in part because they've been working so hard to build up inflation over the years. These 3 consecutive months in a row of over 2% inflation is good news theoretically for the economy of Japan, and it's giving a little bit of a boost to the currency with the idea that maybe the Bank of Japan could be a little less aggressive on the easing side of things, possibly taking a little bit of weakness out of that yen. Nothing announced by the Bank of Japan, of course. Also, dollar weakness is developing based on falling yields. This week especially, we saw yields across the curve drop double digits, 14 basis points in the 2-year, 16 in the 5-year, 13 in the 10-year, and 11 in the 30-year. And a lot of that's come off of the last couple of days. So those dropping yields, again, helping to weaken the dollar and boost the yen.